All right, so we're going to continue on the financial sector, and this is going to lay the groundwork and the foundations for monetary policy. But first, if we're going to talk about banking and the finance sector, we need to talk about the need for banking and why banking exists. I like doing this again through a story. So because economists don't really have much of an imagination, or so I've been told, you're going to have to use your imagination, whisk yourself away into the recollections of Pine Gulch, which you should label your notes though as the need for banking, or the banking system, yeah. So the banking system. So you're not going to, obviously, you're not going to copy down the story, but you are going to copy down bits and pieces of the story as things emerge that I think that are important that you need to write down and that. So we're going to do a little accounting. I'll tell you why the profession of accounting is a sad, sad profession. I'm also going to make fun of my brother repeatedly because he's a CPA and his life and his job are sad. And I'll tell you why they're so sad. So you're going to have to take pity on them. And you'll actually get to see a picture of them too. All right, so again, you're going to have to use your imagination here a little bit. The reason, again, why I like using this is to, one, prove that economists do have imaginations, and two, also it does a good job of explaining why commodity-backed currency is helpful in some senses and is incredibly difficult as far as to grow an economy. So you're going to get to see that also through here. So again, you're going to really have to kind of stick with me. Make sure you ask questions if you're like, that part of the story doesn't make sense. So the story is going to take place in the period of 1840 through 1870. So right through the middle of the Civil War. Why not? All right. So that's not going to really come into play. Really, what's happening in 1849 specifically is going to come into play because 1849 is an important date for us. And in San Francisco specifically, or California specifically, we're going to say that Pine Gulch is located 65 miles northeast of San Francisco. What's happening in this time period in California? The gold rush, good. So that's going to be an important part of the story. All right, so we're talking about the California gold rush. There's gold and then there are hills. All right, so the story is written from Gus Miller. I am your narrator, so that's me. Call me Gus for the next 30 minutes. And what do you think they used for money at that time? Wasn't greenbacks. Gold, good. Dust. Gold and gold dust. So anytime you wanted to buy something, you needed to do so via gold dust. All right. So just as a review, because we're reviewing things here, if the town people went to the blacksmith, bathhouse, or saloon, how did they pay? Good, gold. So early in the morning, the townspeople who weren't part of that profession, maybe some that actually were, they closed up shop, but they'd go and they'd have to venture out and pan for gold in the rivers that surrounded Pine Gulch. So they'd ride out of town. We've already talked about they pan for gold. There's somebody panning for gold. All right, so as you can imagine, the miners have set up some pretty elaborate mining equipment. Ignore the watermark there. Mining equipment, and so this is their one way to get any kind of commodity or anything to spend. So unlike what we do in today's modern economy, which is work and then we get money and then we spend it, they're essentially their work. They get the money immediately. They're not getting paid by anybody except for nature. Nature pays them. But the problem with this is, they had to take their horses and ride out of town. This is the time before there was a sheriff in town. And so they'd have to go and, like I said, ride back and forth into Pine Gulch. When they would ride back into it with their day's work in hand, they'd have cowboys waiting for them behind boulders and whatnot, and they were ready to stick them up, and they were looking to steal the miners' gold. All right, so they take out their 6 shooters, stick them in the back of the miners and demand all their gold. There's my mean cowboy, what looks like a computer representation of cowboys. I should find better pictures and use your guys' pictures for that. I just think of which one of you is going to be the most likely to become a criminal, and then just put that up as a cowboy. Definitely better. So, after being robbed, the miners, as you can imagine, it's the same as into modern day economy. All right, if you're working and you're coming home from work and you get robbed, you're pretty bummed because all your day's work just went in the hands of the person who robbed you. So as you can imagine, the miners didn't like it once. So you might get like it much. So after being robbed for the last time, or they thought, they came, and where do you call a town meeting if you're in a small town? The saloon. Good. All right. So they want to get the meeting together in the saloon. So that's going to be our saloon. All right. So they need somebody to guard the gold dust, because again, if you're going to leave your house for the day, it'd be pretty easy pickings just to go walk into somebody's house and find all their gold dust. So they need to have somebody who's going to guard these gold dusts, but who? All right, so they kind of talk it over, and they decide on Slim. He's the fastest draw in the territory. Nobody'd mess with him. There's Slim. We also decided in the other class, which is the class that Dax is in, that the turtleneck probably made him the most likely to get this job. So nobody would mess with him or his turtlenecks. And so they asked him to take the job, and he answered, what would you, if somebody came to you and said, hey, we want to offer you a job guarding our gold dust, what should be your first question?
Does it pass the Whittle test?
Yeah, how much am I going to get paid? All right, he didn't realize that, so he wasn't a very good Slim in the other class. But how much am I going to get paid? So they thought about it, and they said they'd pay him about 1% of the gold dust that he was guard each month. So what would your next question be? Yeah, what does that translate to, right, a month? So he asked that question, how much gold dust then do you plan on me guarding for each month? And they talk about it, and they said they get about $20,000 each month, meaning his salary is what? 1% of 20,000 is 200. Good job to the four of you that can do simple math. All right, so he's going to get paid 200 a month, which back in the day of 1840s is a decent sum of money. So he's going to agree to it. All right, but he asked the miners, say the townsfolk, if you will, hey, do you mind just give me a few days to shut down my mining operation? Remember, he has a lot of mining equipment that he's going to probably turn around and sell. All right, so bought a house in town, put bars on it, like so. There's this house, it's a nice one. Barred up all the windows and doors, dug a hole beneath his floorboards in order to store all the gold. So he's creating a bank or a safe, a safe, which is a hole. All right, so he had to put his name on the business, so there you go. There's his business right there, Slim's. And in a few days, he's ready to start guarding the gold deposits. All right, so the question is, how is he going to record these transactions? Because he needs to keep track of whose gold is what. So, I've talked about, like I said, my lame brother who's an accountant. His major's useless. One, because the computer does like 99% of his job. He can just plug the stuff into TurboTax and voila, it's done. And if Trump and the Republicans get their way, one of their promises were to make the tax code even simpler, which makes his job even less exciting, because his job's going to be that much simpler. So if TurboTax doesn't take over his job, the simplification of the tax code will. So I can teach you also what it took him 4 years to learn in 5 minutes. All right, so there's my lame brother, dressed as Lumbergh from Office Space, if you've seen that movie. You shouldn't, it's rated R, it's got naughty words in it. All right, so one thing that you have to understand, so here's accounting 101, and I would write this down. I'd maybe write it down, label it T accounts. Label it T accounts. You are going to see this on the AP test for sure. The last couple of years, there have been FRQs about T accounts, so I always, if they do them consistently, a couple of years consistently, they tend then to stop doing that and then focus that more in the multiple choice and use FRQs or something else. So I don't think you'll see a T account on this year's FRQ, but I could be wrong because they don't make me the king of FRQs. in AP Macro. So one thing that's really important to understand about T accounts are assets are things that you own. Liabilities are things that you owe to other people. So if it's a liability, you owe it. If it's an asset, you own it. Sometimes you're like, that guy's a liability. That thinking about that is kind of backwards. All right, so think about, again, liabilities are something that you owe to somebody else. All right, so if you've got that, you are now like halfway to your CPA. Congratulations. I know some of your parents are accountants. You can tell them I ripped on accountants. It's like this nerdy war between economists and accountants. Who can be the biggest nerd and because whose job means more? It's kind of like on Friends when Ross makes fun of geologists because he's a paleontologist. That is, I think, is even more nerdy than economists and CPAs, but that's just me. All right, so the other half of what you need to know is that accountants are nervous people. All right, so there's an accountant being nervous because if they make mistakes or you're dealing with money, and my brother once told me, and this is one reason why his job is so sad, that the best day, one of the highlights of his day is at the end of the day, when he gets down to the end of his spreadsheet, both sides add up and equal out. He's like, that's the best day. I'm like, your job is sad. Right? That's horrible. My best day is teaching a student and possibly leading them to Christ. But I guess, a computer doing your job and the numbers that you put in adding up are okay. So essentially you do what a well-trained monkey could do, right? So anyways, he's nervous of making a mistake because if he makes a mistake, then he has to go back and recheck his work. So he basically deals in simple addition and subtraction. All right, so this happened last time too. So, sorry, PowerPoint froze on me last time. It's not PowerPoint, it's Apple TV, that's the problem. Give me a second, let me log off real quick. These newfound Apple TVs are supposed to be the best ever. Uh-oh. And now we've got a big problem. Okay, there we go. All right, go back to here, go back to there, and we're going to simplify things too. And we're only going to say that you've got to write down things twice. So again, the columns have to add up. That's the biggest thing, and that's the one thing that I would stars is to put down your notes and make sure on the T accounts both sides have to equal out. And that's going to become important as we get into more sophisticated T accounts. You're going to see different things being added to either the asset side or liability side. And it's just there to make sure that they add up or subtract out. And so, again, the AP test is going to try to trick you into subtracting or adding numbers that don't have anything to do with the question. And you'll see that as we get, like I said, further into it with harder T accounts. All right, so your T account is going to be set up like that, where you have assets on one side, liabilities on the other. And yes, they always go where the asset is on the left and liability is on your right. They're always set up like that. So that's a simple T account. Okay, so let's review Accounting 101. What's an asset? Something you own. What's a liability? Something you owe. Are you nervous? Yes, you should be, because that seems too simple. Good. You've learned now in 5 minutes what it took my lame brother 4 years to learn. All right, so that's basic accounting. So we're going to go back to our, take pity on him. We're going to go back to our original story here. So the townspeople come to Slim's and they deposit a total of $10,000 worth of gold dust into their account. So you've got to understand how he's going to record this on his T account. First off, you have to say, who possesses now the gold? Slim does, right? You've heard probably that possession is 9/10 of the law. That's not exactly true, but possession is a huge part of the law. And back then, whoever possessed it owned it. It's the same thing now. So you go to the bank, grandma writes you a $100 check. And remember, if your grandma's anything like mine, $100 might as well have been like 10,000, right? Because your grandma's like, in my day, a nickel, right? So you've got a $100 check, you deposit in the bank. If you just simply deposit the check in the bank, who actually has the check? The bank does. And if grandma writes a check from First Bank and your bank is Wells Fargo, then the Wells Fargo goes to First Bank, hey, you owe us $100 out of this person's account. And so that money transfers to Wells Fargo, and Wells Fargo technically has possession of that money. Now, your agreement with them is, hey, when I need that money, you're going to give it to me. And so that's exactly what they do. It's exactly what Slim is going to, that's the exact agreement Slim has. So in the asset side, he's going to record, and again, I know we're talking about this in dollars. That's to make it simple. Probably what would end up happening is he's going to weigh the gold, each person's gold. So Stuart's gold is he's going to weigh it and say, all right, you have this much weight in gold. And then Barrett's gold, he's going to weigh it, say, all right, you have this much weight in gold. And so on and so forth. Every one of the townspeople is going to weigh the gold, and then what's he going to do in order to, so Stuart, let's say, has 5 pounds of gold. Okay? Stu's rich here. Or you have to ask, like, how many pounds of gold and whatever. But let's say he has 5 pounds of gold. So do both sides equal. Because all he's done is said, all right, Stuart, you have 5 pounds of gold. No, they don't. He has to record that somehow. So he's going to do it with receipts, all right? So he's going to say, all right, he's going to write it down. He's going to say, Stu has 5 pounds of gold. Here you go. And so he's going to record that down. He's going to do that with everybody. So if instead of dollars, you want to think of this as pounds to be more accurate, he'd give 10,000 receipts. But again, it's easier to think about it. So receipts, that's how I shorten receipts down. 10,000 in receipts. So again, this is how you guys have all heard about the pound. The pound is whose currency? The United Kingdom. The reason why it's named the pound is you used to be able to go and exchange a pound, a receipt, for a pound of sterling silver. You used to be able to do that. So 1 pound, the UK money or receipt, would then equal a pound of sterling silver.
Why not gold?
That's just, they just decided to use silver instead of gold. So somebody asked in the other class, well, if that's true then, and the value of silver increases and decreases, what does that mean? Well, it meant that banks would either have to take money back if the value of silver increased, because each one of those pound notes then is worth more, so they have to take actual receipts or currency out of circulation. And then if the pound tanked in value, they have to flood then the market with those receipts to make sure that the pound, that the silver value of silver equaled the amount of pounds or receipts that they had in circulation. So you can imagine it makes it tough. Not impossible though, but it makes it tough. And the same thing's happening here. So that you had a receipt for how many pounds of gold that you had, and you would go into Slim's, and this is going to be part of the story. You're going to go into Slim's, and whenever you needed to buy something, all you had to do was go into Slim's, knock on his door, say, hey Slim, I need to get my horse reshoed. And the blacksmith wants, half a pound of gold to do that. So Slim would then take your receipt, look at it, you've got 5 pounds of gold. You'd scribble out the 5 pounds, put 4.5, weigh out the gold, and give you half a pound of gold. Then you'd go to the blacksmith, give him the half pound of gold. The blacksmith would then go to Slim's and say, hey, I got a half pound more of gold. And then let's say that blacksmith had 10 pounds of gold, he'd scratch that off and put 10.5 pounds of gold. That way then you knew how much gold that you had at Slim's. All right, there's Slim. He's recording these transactions. All right, because really it doesn't change the amount of receipts that are in circulation, right? There's still $10,000 or pounds of gold in circulation. And so this doesn't really change. All it changes is on the person's receipt, whoever has the receipt and has new gold just comes in, and then the number gets scratched out and they put a new number on. All right, so here becomes the problem for Slim. So it's late one night, super late. So for me, that would be like 10:30. For you guys, we're talking probably most of you got done with your homework at 2 this morning. So late one night, a cowboy, there's a poker hand at the local saloon. There's a saloon, remember? Okay, the cowboy has a really good hand, and he wants to match the pot, but he doesn't have enough gold to do so. Remember, he can't throw receipts on there, because he's not going to say, I want to match that pot, maybe it's 2 pounds of gold, and he has just a receipt for 10 pounds. He's not going to throw all that in. So he's going to go get more gold. Where is he going to do that? Yeah, he has to go to Slim's. He's not going to go and mine for gold at the time. He's going to go to Slim's, so the cowboy staggers over to Slim's because it's late, not because he's been drinking. He goes to Slim's and he pounds on the door, and he tells him to get out of bed because, you know, Slim is his servant, and it's early in the morning anyways, and so Slim staggers out of bed. He explains the situation and says that he needs more gold. Slim just records that, right? He takes the gold out and scratches the receipt and so on and so forth. All right, so Slim can't sleep because he's afraid that every morning or early in the morning or late at night, people are going to become knocking on his door. Plus, he can't leave. He can't go anywhere because the people are going to need gold dust in order to make transactions in the town. So he's going to figure out a way to do this. All right, so he takes his 6-shooter out, fires a few rounds in the air, boom, 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 right? Yeah, all right, and he calls a town meeting at the saloon. All right, so he says he's not a 7-Eleven. He's not open 24/7, so this is really inconvenient for him. So he's figured out a way to go about doing this. He says that he's going to close down Slim's for a few days. He'll be back. He's traveling. He's going to take all the gold dust with him to make sure somebody doesn't break into his house. But he says he'll be back. He just simply needs to go and do something. So the townspeople agree reluctantly, and they take out the gold that they might need for a few days. All right, so he says he's here. San Francisco looks quite modern for 1840. All right, so who can entrust Slim that he's not going to just take off, right, with all that gold? All right, so he hitches his horse to a stationery store. He goes to the stationery store. There it is in San Francisco, and he tells the stationery store 65 miles away that he wants to buy them out of all the green paper they have and the pink ink that they have. He wants to buy all of it. And he says, hey, is there any store around here that has it? They say no. And that's going to be an important part of the story right there. All right, so nobody else has green paper or pink ink anywhere in the area, so then he rides back to Pine Gulch. Calls another town meeting where? The saloon, right? It shoots out the O's in the saloon. There's Slim. The saloon. All right. So he tells people he's been thinking about the gold dust situation. It's not very convenient for him. Like I said, he can't go anywhere, and he's getting up early in the morning or late at night. And so he decides that he's going to come up with this plan. And the plan is this. He went to the stationery store in San Francisco and bought them out of all the green paper and pink ink. So there's no green paper or pink ink available in the area. All right, so everybody knows that anything that comes on this green paper and pink ink is his. And so he says, come into my store, exchange your receipts then for these new receipts. And I'm going to give them to you in different denominations. And they can just shop around. So now it's an exchange. Now he's just made money. Right? He's made a simple commodity-backed money. So that if you need to go to the blacksmith, instead of going to Slim's and getting the gold dust, you instead just pay the blacksmith with these new receipts in the denominations that he wanted. If the blacksmith needs to go out of town, he can go to Slim's and say, hey, I've got this much currency, which is essentially how many pounds of gold dust I have. I need to exchange it for gold to go into another town because they don't accept your green paper and pink ink. And so he's just made a commodity-backed currency. So remember, what makes up money? What are the 3 characteristics that make money? It has to be a store of value, which this is, right, is backed by gold. A medium of exchange. All the townspeople are going to take and take these receipts. They're also going to buy in them. And it also has to be a unit of account, which you have, there's the townspeople, which you have on the next slide, evidently. All right, so they're going to agree to that. Okay, and it meets all 3 of those criteria. Store of value, gold, backed by gold, immediate exchange, everybody's going to pay for things in that and accept that, and it's going to be a unit of account. So that's essentially how it's going to be. So how does he record this in his books? Does anything in the T account change? No, because the receipts are what now? Yeah, they're green paper and pink ink, right? So nothing's going to change on this. So you don't have to worry about doing something geeky accounting-wise. He's done nothing to the money supply. All he's done is exchange. It's kind of like when in Naked Money when he talks about North Korea and dropping zeros off. They didn't have to go in and exchange currency for that. Now the currency was worth less, but they didn't have to actually go and exchange currency. All right, so the new money is this. We talked about it. Why is this? Because it meets all three. All right, there's the unit of account, and so there you go. You made it different denominations. All right, things are going to go great for a few years because they're just going to pay, and as long as it's a closed economy, it's fine. Anytime somebody needs to travel out, they just go get gold dust from him, and they exchange the receipts for it. All right, he doesn't even have to really worry about people coming in for gold dust, only unless they're going out of town. There's Slim. There's going to be the owner.
That was like a year ago.
Yeah, so what? You told me I couldn't get you a picture. I'm friends with your mom on Facebook, so there you go. All right, so he's going to be the saloon owner. All right, so sarsaparilla, glass of sarsaparilla, which I actually have tried because I didn't realize they sold them at Rocket Fizz until a student brought me some. It's interesting. So a saloon owner offers him a free glass of sarsaparilla. Slim is suspicious because remember, nothing is free. But he's thirsty anyways, and he takes the offer. And the saloon owner says, "Hey, can I offer you, or can I ask you a question?" And Slim gets mad because nothing's free, right? All right, so he wants to expand his business. The saloon owner would like to add a room onto his business. But he doesn't have the cash to do it. He doesn't have the receipts or the gold dust to do it. All right, so he asks if he can borrow some of Slim's. Slim says, "Sorry, buddy." All right, there's buddy. "Sorry, buddy, I'd like to help, but all my money," he's bought a plot of land outside of town, and he wants to retire on it and some few horses and stuff like that. So his money's tied up other places, so he can't offer him a loan personally. Here becomes a problem with commodity-backed money. What do? You can't make new gold just appear. Okay, so that might be something I'd write in my notes for those of you that didn't put them away because I didn't tell you to because we're out at 8:35. Slim now there's a problem in this closed economy. They cannot make money just appear because it has to be backed by money. Here's an issue with, like I said, commodity-backed currency. So if you want to expand the economy, which this is going to do, right? Because what's the saloon owner going to have to do in order to expand his saloon? He wants to add a room. Yeah.
Pay people to build it.
Exactly. He's going to have to pay people to build it. Is that good for the people who are going to be building this room? Yeah, of course. It means jobs for them. Okay, second, what are those people going to do with that newfound income? What are they going to probably do with a high percent based on their marginal propensity to consume? Spend it, which is good for everybody in the town because any business owner, probably the saloon owner specifically, is going to benefit from that new spending. So that's good. And then last, this is going to benefit people that he might employ because of the new expanded business. So it's going to benefit people within the economy. The problem is there's no way to just make commodities appear. And the same thing happens in a bigger economy. If a business wants to expand, they go to a bank for a loan. They say, "Hey, can I have a loan?" And it's a commodity-backed currency. They can't just make it rain gold, which would be really nice. But then gold is a significant value. So it's kind of a double-edged sword there. All right, so the saloon owner is angry because he's like, "Well, I gave you that free glass of sarsaparilla and I got nothing in return." So he's angry. Slim thinks to himself, and he has an idea, and he says, "How much is he going to need? The saloon owner going to need?" The saloon owner responds, $5,000. All right, so Slim comes up with this idea, and he says, "All right, well, nobody comes in for gold dust hardly anymore. I'm just gonna basically he's like, they only come in when they're leaving town, and not a lot of people leave town because it's 1840. And so he's gonna sign out $5,000 worth of receipts, and he can pay him back in 6 months. So the saloon owner's gonna have to agree. He's creating a credit system. Okay, he's gonna loan him out money, but the problem is it's gonna be money that he doesn't have. Now, that's not backed, sorry, by any commodity. All right, so the saloon owner says, hey, I don't have enough gold to cover that. Slim says, hey, no problem, buddy, just meet me in the morning at 8 in the morning. But he shows up late and half awake because he's a saloon owner, so he keeps late hours. So he finally gets there. Slim has $5,000 in receipts waiting for him. All right, so as the saloon owner goes for the $5,000, Slim slaps his hand away and says, not so fast, my friend. That's Slim. He's a violent guy. He pulls out a sheet of paper and says, you're going to sign it, and here's what this piece of paper says. I owe Slim $5,000 plus $1,000, interest payable in 6 months. What is Slim having the saloon owner sign? A contract, a loan agreement, right? What percentage is Slim earning, by the way, on this?
Really good.
Yeah, really good, which is what? 20%, good job, right? You guys are starting to wake up. All right, so he's going to earn 20% interest, which is that is insanely high, that criminal. If you have a credit card, which many of you probably don't have yet, but when you sign up for a credit card, the average interest rate that you're paying back on it is about 25 to 30%. So a credit that we're talking like MasterCard or Visa card. If you go to Home Depot, it's good if you can get a year-long or 6-month no interest credit agreement with them if you're going to pay it back in 6 months or a year. If you can't, they charge back interest. So that original, let's say $2,000 that you had to spend because you needed the brand new 4K definition TV, and you're like, oh, I'll pay that back in a year. And then you only have, let's say, $20 left to pay back in that year. You pay all that back interest on that $2,000. So the side rant here is be really careful if you do that. It's a great deal if you can pay it back in the no interest time. It's a horrible deal if you can't. All right, so the saloon owner knows he needs the money, so he reluctantly signs. So here's what we're gonna end. What happens to the amount of money in Pine Gulch? It's just increased. Okay, so that's the last thing you should write in your notes, and I'm going to let you go. When loans are made, when the bank makes a loan, I shouldn't say when loans are made. When a bank makes a loan, the money supply increases. When the bank, and you don't have to write this down, but when the bank receives that $100 from grandma, and let's say you keep it in a savings account, the bank has to legally hold some of it back. We'll talk about reserve requirements. But they're going to hold some of it back, but they're going to loan out that $90. That's going to increase the money supply by $90 because technically you have claim to that $90, and then the bank is going to have claim to the loan repayment. So it's going to increase the amount of money in the money supply. We will continue on with the story to see what happens next in Pine Gulch. See you guys later.
Thank you.
Yep.